Good afternoon. Welcome to IR Insight Live. I'm your host, Ricardo Estrada. Joining me today, we have Masoud Gausi, who is a senior analyst for Nasdaq IR Intelligence. Masoud, thanks so much for joining us.
How's it going, Ricardo?
Oh, it's going well. It's been a while since we've had you back on, or since we've been on. To kick things off, can you just kind of touch on the volatility in the markets? What have you seen there?
Yeah, absolutely. So for the last few weeks, I should say, we've been equity markets have been exhibiting quite some volatility.
Yep.
I guess the underlying question is why. Reason being is we're going through what's called the Great Unwind. Essentially, the Federal Reserve is reversing about 9 years of accommodative monetary policy. Perhaps one can make the claim that it's one of the most aggressive loose monetary policies that we've ever had. So unwinding that obviously is bringing a lot of volatility back into the markets. Now, why is it bringing volatility back to the markets? So over the last 9 years, with the Fed pumping liquidity into the markets and taking volatility out, essentially what they have been doing is that they've been pushing investors to riskier assets. As such, we've seen the markets rally pretty aggressively, growth names being bid up. And now that that's reversing, we're seeing growth names underperform, value names relatively outperform. And on top of that, we have trade tensions, concerns about earnings, concerns about global growth. So the mindset of investors are somewhat a little bit negative currently, and that's exacerbating the whole situation.
That's interesting. Yesterday you were quoted in Reuters, and you talked about sentiment and negative news. Can you just explain what's on investors' minds?
Yeah, so investors are slightly nervous. The fundamental question they're asking themselves is, are we in the late innings of this cycle? Are we in peak earnings, peak growth? And it seems as though investors are getting somewhat defensive. To my earlier point, we're seeing value outperform growth. So investors are tilting away and moving into more defensive sectors. That's manifested by outperformance in utilities, which is oddly an income sector. And in a rate hike environment, you'd expect utilities to sell off, but they're being bid up. Real estate and consumer staples. So those three sectors, which are generally known as the income, defensive, however you want to call it, are rallying. In terms of what's on the mind of investors, 1, earnings growth, 2, tariffs, 3, slowing of global growth, the strength in the dollar, and finally, emerging market risk. So those are the things that they are paying quite some attention on.
Great. And you mentioned earnings. Can you kind of provide any key takeaways that you've seen so far?
Yeah, so if you look at the first half and also Q3, EPS has been growing over and above 20%. Sales has been growing between 7 to 10%. So we're seeing some very good earning numbers coming out of corporate America, fueled mostly by deregulation, tax cuts. Now with tariffs kicking in, with volatility kicking in, investors are concerned that there's a slowdown in sales revenue and also in EPS growth. So we may see sales come down to anything below 5% and EPS could potentially come down below 15%. So once earnings slows, that obviously impact share prices. And in terms of transcripts and earnings call, I think we'll be paying a lot of attention to how tariffs will impact margins, supply chains, also wage inflation, and interest rates. So those are the key takeaway from earnings.
All right, Masoud, well, that's all the time we have today. Thanks so much for joining us.
Thanks, Ricardo.
On IR Insight Live. And thanks to you, viewers, for joining us today on IR Insight Live. If you have any questions or would like to learn more about Masoud and his team, please visit business.nasdaq.com. Thanks again, and see you next time.